So in today's video, let's understand the concept of GAAP, IFRS, IAS, IND AS, and ES. How do we follow IFRS and applicability of IND AS and the need of IFRS? So let's understand the meaning of GAAP. Generally accepted accounting principle is a full form of GAAP. Now, and this set of principles which is being used when we are preparing the financial statement. The main objective of the GAAP is to improve the financial statement in terms of clarity, to maintain a consistency in the financial statement, and to have a comparability between the financial statement, that is maybe from when we compare the financial statement of the previous year with the current year. So or if we compare the financial statement of company A with our competitors company, so like that. So when we want to compare the financial statement or to have maintain a consistency in preparing the financial statement, we require a standard set of rules, the principles, and that principles we call that as a GAAP. And who has issued the GAAP? GAAP was being issued by FASB, that is Financial Accounting Standard Board. And why do we need this GAAP? We need this GAAP, the set of standards, in order to communicate this financial information to the users. Now we have in a company, we have internal users and external users. Two users we have in our company. So external users are the one we call them as the stakeholders who are directly or indirectly connected to our company. So, and the internal users, example, employees who are working in our organization. So there are internal users and external users. For all the users, we have supposed to we have need to communicate the financial information. So hence, the GAAP is all about a set of standards or principles which need to be applied when we are preparing the financial statement in order to maintain the clarity, consistency, and the comparability of our company's financial statement. I hope I'm clear about the concept of GAAP. Now, let's understand. We have two classification. One is the national GAAP and the another one is international GAAP. National GAAP is nothing but when a country makes its own accounting standards and it is used only by that country. Now, for example, when a country make their own set of standards, and that set of standards are followed by only that particular country, and that type of standards we call that as a national standards, that we call it as a national GAAP, and that type of national GAAP is being applied in our country, and that national GAAP in our country we used to call that as a IAS, that is accounting standards. We call that as a accounting standards. IAS. We call that as an accounting standard. The same national GAAP, what they had a set of standards which is maintained by only US country. So that we used to call it as US GAAP. So I repeat once again, the national GAAP is just nothing but when any country makes their own set of standards to prepare the financial statement, and that standard is being followed only in that particular country, and that kind of standards, or we call it as a national GAAP. In our country also, we used to prepare this. We had a national GAAP, and that GAAP we used to call that as a accounting standard, IAS. Okay, and in US also we had, and that we used to call it as US GAAP. Now moving on to the international GAAP. Here we call it as IAS, that is International Accounting Standards. When a few countries join together and they form their set of standards, and that standards are followed by that group of country, and that kind of standards we call it as an international GAAP. Then we call that as an International Accounting Standard, IAS. So that is when this IAS was followed by European countries and UK countries too. So when the few group of countries, they prepare their own set of standards, and that standards are followed by that group of country, then that kind of standards we call it as an international standards, that is international GAAP. We call that as an international accounting standard. And when I'm talking about the national GAAP, when one single country prepare their own set of accounting standards, and that standards are only followed by that individual single country, and that kind of standards we call it as national GAAP. And in our country we used to call that as accounting standards. Now moving on to the next one. After understanding the classification of the GAAP, there was a drawback here where as I mentioned, the India was following EAS, that is accounting standard. They had their own set of standards. US had the US set of standard. Like this, UK had their own standards. European countries had different standards. When they have, each country has their own standards, and it was a complication that if they wanted to do a business in the other country or a foreign investment, if any company wanted to do, then we had a complication that we cannot compare the financial statements, because they have the financial statement as prepared as per the standards of that individual country. So hence we cannot do any business. A foreign direct investment cannot be done, or any the foreign company cannot do the business in any other country. That was a major drawback we had at that point of time. Now, in order to remove this drawback, later on we got a new set of rules. That is, the next we are talking about IFRS. IFRS full form, International Financial Reporting Standard. Now, what is this International Financial Reporting Standard is all about? This is a set of common rules which has to be followed by all the companies, that is throughout the world. This common set of rules has to be followed when we are preparing the financial statement. And this set of IFRS has to be obeyed or has to be followed by all the companies in throughout the world. Now, what kind of rules here is it? These rules are help us to maintain a consistency, a transparency, and comparability around the world. So all the companies, all the countries has to follow only single common rule, that is IFRS. When they are preparing the financial statement, all the countries has to follow only one rule, that is IFRS. So now it helps. It is very easy to compare and to have a transparency in the financial statement, as all the countries are following only single common rule, that is IFRS. Okay. Now, who has issued the IFRS? IFRS are issued by the International Accounting Standard Board, that is IASB, and they specify how the companies must maintain and report their accountings. So this also was all about IFRS. IFRS is just a set of rules which has to be followed by all the countries in the world. And in why we need this IFRS? We need this IFRS in order to maintain a consistency, a transparency, and a comparability of the financial statements. So that help us to do it encourages the foreign direct investments. I hope I'm clear with the concept of IFRS. Now, let's understand how to follow this IFRS. Now, this IFRS was applicable in the year 2015 on 16th Feb, which was IFRS was issued. The set of rules was issued by MCA, that is Ministry of Corporate Affairs. So they issued the IFRS rules that need to be adopted in the world. So when they issued in the year 2015 on 16th February, who has issued? MCA. MCA stands for Ministry of Corporate Affairs. Now, what this all IFRS, how to adopt this, how to follow this IFRS? Now, they gave two options. One is IFRS adopt and second one is IFRS converge. How to adopt this IFRS? Let's understand the meaning of IFRS adopt first. Now, IFRS adopt isn't IFRS, as I said to you, it is just a set of rules, right? Now, when the set of rules, the MCA, when they issued that, it has to be adopted by all the companies in the world. Then they gave a two options for the companies. One is, the companies has to adopt the complete exactly the rules what is given by the MCA, or they have to prepare their own set of standards, so that which should be just similar to IFRS. That you call it as IFRS converge. I repeat, IFRS adopt is nothing but whatever the rules which is prescribed by the MCA, the same rules has to be adopted by the country or all the companies. So that when the country adopt the same set of rules which is issued by MCA, and that we call it as a IFRS adopt. If any country says that no, I cannot follow this, I don't want to adopt the same IFRS rule, but I'll prepare my own set of standards which should be in line of to IFRS, which is just a similar to IFRS, and that kind of standards which is prepared by a country, and that standards we call that as a IFRS standards. IFRS converge. IFRS converge are the rules which is just similar to IFRS, which will be in line to IFRS. Now, for example, IFRS adopt is just blindly the rules which has been given by the MCA that was complete. It was just accepted by a country, example, Bangladesh. They just adopted that rules. So they didn't wanted to prepare their own set of standards, which is just similar to IFRS. But when I'm talking about converse, when I'm talking about our country, that is India, there the India wanted to make prepare their own set of standards which will be in line to IFRS. That is just the India prepared a standard same set of rules which is just similar to IFRS, and that new IFRS rules we call that as a IND AS, IND AS. We call that a new version, of AS. We call it as an IND AS. That is, the India, our country, has done a IFRS converge. India has prepared a similar kind of set of rules which is in line with to IFRS. So hence that standards or that rules we call that as an IND AS. Okay, I hope I'm clear till here. Next we have, I'm talking about the new versions of national GAAP and international GAAP. This we have discussed before itself, then about the national GAAP and international GAAP. So after the IFRS has to be implemented throughout the world, and as I said in the previous slide, that India prepared a similar set of rules which is just similar to IFRS, and that rules we call that as an IND AS. This IND AS is a new version of IAS. Okay, sorry. This IND AS is a new version of IAS. Similarly, IAS, which was an international accounting standard, this was an old version. Now, after adopting this is IFRS is a new version of IAS. New version of IAS is IFRS. New version of IAS is IND AS. I hope I'm clear till here. Next, move on to the next one. Now, applicability of IND AS. Now, as I said to you, in the year 2015, 16th February, MCA issued that all the countries has to adopt the IFRS. Now, in the adoption also, they had a different phases. So that is, let's understand these phases. Now, adoption of, they had two options. One is voluntary adoption and one other is mandatory adoption. Voluntary adoption is nothing but when any company, any country voluntarily they are willing to immediately adopt that IFRS rule, and that companies come under the category of voluntary adoption. In the year 2015, they voluntarily they come up with that they said that they want to adopt this IFRS rules in their company. So that kind companies come under the category of voluntary. Now, few countries or the few companies they didn't adopt it immediately. Okay, that time the company, the MCA instructed that it has to be a mandatory adoption also. This mandatory is nothing but compulsory adoption. This compulsory adoption also happened in between two, it was happened in two phases, phase 1 and phase 2. Phase is nothing but stage 1 and stage 2. And stage 1 happened in the year 1st April 2016, and the second phase happened in the year 1st April 2017. Now let's understand with a better mode by this chart. The financial year 2016-17, that is the first stage where the listed or the unlisted companies in India, that means any company which is listed in the share market or the companies which are not listed in the share market, all have to mandatorily, they have to adopt IFRS whose net worth is of rupees 500 crores and more than 500 crores. The net worth is nothing but net worth comprises equity shares plus preference shares plus reserves and surplus. We call that as a net worth of a company. Now, any company whose net worth is of rupees more than 500 crores or which is rupees 500 crores, then that companies mandatorily, they said that they have to, those companies come under the phase 1 and they have to mandatorily adopt the IFRS. Now, we had a second stage also. In the second stage, the listed or unlisted, the companies which in India we are talking. So the listed and unlisted we are talking means the listed companies are nothing but the companies which are listed in the share market. They are trading companies. Okay, the listed and which are not enlisted also. All that companies whose net worth of rupees 250 crores or more than 250 crores but less than 500 crores, all that group of companies have to, which they fall under this this lot all have to adopt the IFRS in the year that was a mandatory. They made it in the year 2017. I repeat once again, the companies whose net worth is which falls under between the 500 crores or more than 500 crores, and that those companies was whether they are listed or unlisted, those companies mandatorily they have to instructed that they have to adopt IFRS. When I'm talking about in the year 2017, in the second stage, they said that the company's net worth is rupees 250 crores or more than 250 crores but less than to 500 crores rupees, and that those companies whether they are listed or unlisted, then in the year 2017 they issued that those companies has to mandatorily follow the IFRS. So IFRS is all about the set of common rules which need to be followed by all the countries in order to maintain a transparency and comparability and to have a consistency in preparing the financial statements. So that is all about today's video.